back to my YouTube channel. My name is Deb and this is Learn with Mr. Deb. Thank you for visiting my YouTube channel. I am doing another educational video. Today I'm doing an educational video which is on finance, particularly looking at break-even analysis. It's a topic which is tested at GCSE and A'Level Business, common topic. I'm going to give you a definition, I'm going to tell you why it's done, I'm going to tell you how it's done, and I'm going to show you a worked example of how break-even works. So without further ado, I'm going to give you a definition. Break-even is the point at which a business makes neither a profit or a loss. It's when a business's total sales equal its total costs. So why do you do it? There are a number of reasons why businesses carry out break-even analysis as a tool. So it helps calculate profitability. It helps work out what the business's profitability is. It also helps business in terms of setting targets, in terms of units or in terms of revenue. It also helps business when they put together their plans, business plans, especially if a business is about to start and needs cash and needs a loan. They might put a business plan together and they will put break even as one of the tools to show how much profit the business is going to make. How it's done: in order to do break even, you need to know some key pieces of information. So the information you need to know are fixed cost. Fixed cost is a cost that doesn't change with output. You need to know variable cost. Variable cost is a cost, beg your pardon, that changes with output. You need to know total cost. Total cost is when you add fixed cost plus variable cost. And you also need to know total revenue. And total revenue is calculated by taking selling price, multiplying by your amount sold. So you need to know these key pieces of information. So now I'm going to give you a worked example of how you would go about calculating break even when you put it together in a table. Now this kind of table might be given in an exam where you might get given figures and you would have to plot the figures in. You might also be given a graph, which we'll look at a later video, where you might have to construct a graph or might have to label a graph. We'll look at that at a later video. So to start off with, we're going to look at this particular case study. So actual output for DHF, Deb Health and Fitness, is 400. So they're expecting to make and sell 400 items of product. Their fixed cost is £1,000. Their selling price of each individual item is £10, and their variable cost of making and selling that product is £5. Let's now work out break-even output. So what we have to do, knowing that output is 400 or total output, we will plot the figures in as we go through. So the first thing we do, the easiest figures to put in is your fixed cost. Remember, your fixed cost is 1,000 and it stays the same regardless of output. So if they are selling 50 items, their fixed cost is going to be 1,000. If they are selling 100, their fixed cost is still 1,000. If they sell 150, fixed cost is 1,000. And so you get the idea. So it's always going to remain 1,000 because it's regardless of output. So we put 1,000 in all the way down. Then we work out variable cost. Now variable cost changes with output. So to work out variable cost, we have to multiply how much the output is by how much the variable cost per item is. So we times that, which is 5, multiplied by these figures here. So 5 times 50, 5 times 100, 5 times 150, 5 times 200, etc, etc. So we'll put down the variable cost. Hope that makes sense. Is 250, 5 times 100 is 500, and so you can see the pattern is it's going up in 250s each time. So 250, 500, 750, 1,000, 1,250, 1,500, 1,750 and 2,000. Forgot to put that 1,000 in. So now we need to work out total cost. Now, to work out total cost, you have to add fixed cost and variable cost together. So we've got 1,000 here and 250. So we just do these two added together. That gives you 1,250. 1,000 plus 500 gives you 1,500. 1,000 plus 750 gives you 1,750. 1,000 plus 1,000 gives you 2,000. 1,000 plus 1,250 will give you 2,250. 1,000 plus 1,500 is 2,500. 1,000 plus 1,750 is 2,750. And 1,000 plus 2,000 gives you 3,000. So we have now worked out fixed cost, variable cost, and total cost. Now what we have to do is work out what total revenue is. Now total revenue, as I previously told you how to work it out, it's price, how much your selling price is, times by quantity sold, or times by output. So your selling price is 10, you're multiplying it by output, so 10 multiplied by 50, 10 times 50 will give you 500. 10 times 10 gives you 1,000. 10 times 150 will give you 1,500. So as you can see, it's going up in 500s. So next one will be 2,000, 2,500, 3,000, 3,000 and 500, and then finally 4,000. Now what we're going to work out is the profit. So what we're going to do is we're going to deduct our total revenue away from total cost. Now what you'll realise is the total revenue is 500 and the total cost is 1,250. So if you deduct that away from that, you will get a minus figure. So the first one, 500 take away 1,250, will give you a minus £750. Now we put it in brackets to represent it's a minus figure. The next one, which is 1,000 take away 1,500, will give you a minus 500. The next one, which is 1,500 take away 1,750, will give you a minus 250. And then the next one, interestingly, is 2,000, which is your total revenue minus your total cost, which is 2,000, and it will give you 0. Now that's an interesting figure, 0. We'll come back to that in a second. So the next one is 2,500 take away 2,250. So now we're into positive. So that one is 250. The next one, as you see, they're going up in 250 is 500. The next one is 750. And the last one is 1,000. So that will give you your profit. Now, interestingly, as you can see, when the business sells output of 200, the profit is 0, and that is the point of break even, because total revenue, which is here, equals total cost. Total revenue is 2,000, total cost is 2,000, therefore the profit is 0, and that is the break even output. That is how we've come to the figure of 0 by taking away total cost away from total revenue, or total revenue away from total cost. That is the point of break even. That is the point where a business makes neither a profit nor a loss. So that is the first of a series of videos that I'm doing on break even. Please go next to see how you put that together in a graph, because I will illustrate that in a graph format. Thank you so much for watching. If you have any questions, please write into the comments box. If you have any further ideas or suggestions, please don't forget to write that into the comments box. If you like the video, please give me a thumbs up and don't forget to subscribe. Have a great day.